Nigerian equities has continued its negative trend as profit taken by investors continue, despite some half-year earnings by companies. And I have Opeoluwa Oluwa, a research analyst at Cordros Securities. He joins me now for a wrap of the equities market this week. Thanks so much for your time today, Opeoluwa. And let's first start with what we're seeing play out with sentiments today.
Okay, so thank you very much. Like you said, the week has been in a red mostly as we've seen investors, take positions off the different, formerly high performance stock. This week we saw, Guinness hit 17 naira levels. We saw GTP rather hit 17 naira, hit 19 naira levels rather. We saw stock like MTN, touch 190, going below the 200 naira mark that we saw it, going to earlier part of the year, and it's basically attributed to basically the kind of panic that we have right now in the domestic economy, especially with foreign exchange and the rest. So this caused a lot of sell-offs for the top names in the market. Speaking about the banks and all these other bellwether stocks that currently have in domestic markets. Today we've seen some buying interest in the banking names. I think investors view that where prices are currently very favorable for re-entry. And for instance, if you look at GTP, for instance, dividend yield at current price levels is levels of 15%, which investors view as very attractive. So I think this is what I've seen some sort of re-entry into this section.
Right, now let's get into what we're seeing play out in the consumer space, and I'd like to start with the earnings we've seen out so far, UACN here and also Nestle.
Okay, so the names you've called, right? They've had top line growth. For instance, Nestle grew by 30%. That's its revenue grew by 30%. Seen its earnings per share, up by 28%. And this also continues to, highlight the resilience that this company continue to put out in the face of, very, very strenuous economic conditions. For example, you cite the kind of pressures that face, talk about inflationary pressures, talk about pressures for importers of raw materials, basically, and basically, stock pressures in the cost of goods and also operating expenses. It's quite impressive that both companies are able to put out growth with the kind of economic environment that we are currently in.
Yeah, because now I'm curious to know your thoughts around the FX situation, especially around what we're seeing play out with the weakening of the local currency in the parallel market, and how this will trickle in for the consumer goods players.
Yeah, so the big impact of this will have would be a significant balance or a significant negative balance in the foreign exchange line of this company. For instance, we've seen results from importer like NASCON, for instance, has seen was had its earnings hampered by the impact of FX differences basically on its accounts, and this is quite massive. So, with FX continue to be, or availability continue to be being a big issue for operating in the consumer goods space, we think this will continue to hamper margins and in turn earnings until there's a respite.
And about talking about the catalyst for the markets now, I'm thinking we've seen this slide continue since the MPC announcement last week, nine consecutive days now. What is it that you see down the line? Or do you think this is going to continue until when, or what could change the trajectory of the market?
Yeah, so on market trajectory, right? I think, or generally, I think the impact of earnings releases and ensuing interim dividend announcements would probably have a positive impact if there's some sort of respite in the FX on in the domestic markets. Basically, there's a lot of pressure surrounding FX right now, which has continued to influence investment decisions. So we have this playing out, and it just depends on how earnings or how the earnings come in earnings for first half of 2022 play out. But in our view, we believe that the interplay between these two factors will most likely determine where the market will sit at the in the interim.
All right.